Warriors, we have a great guest today. Dave Floyd is with us. Dave, I've known for many years. We go back. Well, I still had gray hair then, and Dave looks the same as he did. How long ago was it that we met, Dave? A decade ago or something like that?
Probably a decade plus. I would say maybe back into 2012. So yeah, a
Okay,
decade
yeah,
plus.
yeah. So we've and we were already into the midpoint of our careers anyway
Mhm.
back then. So I'm starting to get the hang of trading now. Yeah, after
It-
35, 40 years, don't you think you'd probably start to get the hang of it a little bit?
you get the hang of it, and the market finally teaches you. You're kind of dumb. Follow the rules.
Yeah, there you go. Yeah, so you get tired of getting hit in the head with a ball peen hammer. So, Dave, you're the owner of Aspen, and Aspen's
Mhm.
been around what, 20 years as well? About that long?
Started in '04, so 21 in the
Okay.
21st year.
Well, congratulations in this industry. That's staying power.
Yeah.
Okay.
Oh, it's had its ups and downs, as you would imagine.
Yeah, well, yeah, I mean, you could look at someone's employment history in 20 years and you'd see a lot of changes. Most people in our industry, especially with, the change from open outcry to the way it is now. So, I'm curious, what were you thinking about, say, high school, college age, that drew you into the financial markets, that you knew this was something you wanted to learn and pursue? Um, Say, for example, what were you thinking when you were going to university?
Well, the first couple of years of university, probably like most people, but I'll speak for myself. I went to Northeastern University in Boston. Started there in 1985. So there we go. There's the marker for
Yeah,
age. First couple of years, I really didn't know, but it became clear that I wanted to track towards the investment world. And at that time, investment world, I knew nothing about
right.
trading. Now, being in Boston, it's pretty easy to be exposed to all the financial firms that were there. And I ended up working for a company called Scudder, which was an old blue blood New England mutual fund firm right after college. At that time, I'd started to get an inkling of trading, the whole idea of trading. We had access to the trading desk there in terms of placing trades. So myself and my coworkers would start to do that. And then what really clicked the light bulb for me, I had a colleague of mine say, Dave, have you ever read the book Market Wizards? And I had no clue. I'm like,
Yeah,
no. I went to the Harvard Coop, which is the bookstore in Harvard Square that night,
yeah.
grabbed both copies because at that time there was Market Wizards and New Market Wizards. I read them within a day and a half, and I was like, okay, this is what I want to do. And I
And
segued from Boston to San Francisco. I got a job as an institutional trader, and I used air quotes on trader because really all I was doing was I was a glorified order taker, but it didn't matter. I was on a trading desk.
right, right.
And at that point, it was really clear to me that I had this idea that I could take advantage of short-term price action during the day. Whether or not that was true, that was in my mind.
You saw the ranges, you see the opportunity if you could
Yep.
find a tool to help
Yep.
you time the zig and the zags, right?
Exactly. So
Yeah.
I was with that bank. I was a Standard Chartered bank, big British bank at the time, FX fixed income desk. Great job. Best jobs I've ever had because it gave me that exposure. And then I had this opportunity to go with a prop firm. This is the early stages
Wow.
of electronic trading.
Yeah.
Direct connection to the NYSE, a super dot machine, as they called them. I don't know if
Was
they,
that the Souls Bandit days?
that was also the SOS Bandit days. I wasn't doing
Okay.
NASDAQ. I did New
Okay.
York Stock Exchange stock. So I was on the super dot. I was probably one of the first 50 guys in the country to have that. At that time, I was 24, maybe 25.
Yeah.
I was with the firm called Bright Trading, which probably most people are familiar with. They are still around. And the two guys that founded that were former card counters. These guys were
Okay.
characters
All right.
and great traders.
Yeah.
They knew how to manage risk, they knew how to take risk. And that was my foray into it. I was with
Okay.
Bright Trading for a few years, then I went off and started another proprietary trading firm, and then ultimately morphed into Aspen Trading Group back in '04. So my journey has always been on the short term trading side of things. That's what resonates with me, and that's what I'm still doing to this day.
Okay, and I remember, I think you practice Elliott, if
Yeah.
my memory is correct.
Yep.
So, would you say that Prechter's book or Glenn Neely's book or what Elliott Wave practitioner did you cut your teeth on, and what makes your Elliott different now?
Good question. I think it was a combination of Robert Minor and
Minor,
and
still
the
around, still
yeah,
around.
and the
Yeah,
Practice book.
yeah.
But here's the thing, I don't use Elliott anymore.
Okay,
I'm familiar with it. No, not familiar with it. I casually might use it, but I had a realization about probably about 7 years ago that even though Elliott is an objective framework, it's still you putting on you're basically imposing a view onto the market. Now, granted, it's within the Elliott wave structure, so I'm not taking anything away from it.
yeah. But
But
there's
I
always
want
alternate counts,
right. And
right?
more importantly, I think the best way for listeners to understand what I was going through my head at that time was unless everybody else collectively is looking at that same wave count, pullback, price target, it's kind of like me being in the middle of the woods screaming. Nobody's going to hear me. And that was kind of the aha moment for me. And I think that goes for most analysis. Again, I'm not saying any of the analysis is wrong, it's not effective, but I wanted something that was a little bit more of an edge. I'd rather be in sync with what the market's looking at as opposed to me going, hey, this is what I'm looking at. And I'm praying that the market is also looking at the same thing.
So you went more mechanical?
Much more mechanical. I just started
A
looking for
system, you're a systems trader now.
well, no, I'm still discretionary, but what I'm doing is I'm using a mechanical, or let's say the calculation of price levels that are derived based on price activity, volume, and frequency of trades across segmented timeframes. Basically, looking to find out where the market's left a lot of breadcrumbs, whether it be 24 hours ago, a week ago, 2 years ago, because that tells me then that when live price action interacts with those levels, market's going to do something. We don't know if it's going to go up or down from there, but in my mind, at least it tells me this is an area where I should be interested. So that was the evolution for me. And
Okay,
it's
was
made
that like market profile, or some people use dark pools to give them tells? A lot of people use option flow to give them tell. Which is it that you're using for
it's
that?
funny you mention option flows, but that's more of not I don't want to say secondary, but the initial way of calculating the levels is very similar to market profile. You're looking for where those orders have been executed over a period of time at a particular price level, where it
Yeah.
leaves kind of a cluster. So yeah, that's step number one. Now I primarily trade the S&P, so then I'm looking for those similar price levels in VIX. Can we get some sort of a confluence? And then you mentioned
Okay.
option flows, and that's been the probably the really the nicest rounding out for me in the last few years because there's been such an explosion in options volume,
Yes.
basically changed the way the market trades. And if you're not looking at that, you're kind of missing a key piece. So whenever I'm trading S&Ps, I'm trying to be to do there's no perfect science to this. Is there a net call buying? Is there net put buying? And then you're using that as, well, I'm looking to buy this support. Put buying starting to decrease, call buying is increasing. Okay, I got all my boxes checked. VIX is holding a resistance level because VIX and S&Ps are inversely
Yes.
correlated, as we
Right.
know.
Yeah.
So your question was great. It kind of led me into that kind of that three steps that I want. I want the price level to give me the indication there's an opportunity. Does that same price level exist in the VIX? And then what are option flows doing? And
Okay.
I'll look at option flows on the session, and then I'll look at option flows in isolation. What did they do after that latest swing low or that latest swing high to give me more of a recency? It's important to know what the session is. Are we net positive, net negative? But
Right.
what are they on those little intraday swings? Because that's giving you a sense of what's happening in the most recent time frame.
Yeah, and the options that you look at, I've learned a lot from Mike Venezia here, who uses option sweeps for giving him market tells on individual equities.
Yeah,
And you know, you could tell the difference, like Mike says, you know, if they're buying them a week out, it's not as important as if they're going out 3 months and just hitting the bid. And they may not work right away, I've noticed, but they end up working and they bought enough time for them to work. You talk about, and this is the way a lot of people come into the market. They learn, and it's a great thing to know. You know, there's certain education companies that they taught about demand and supply zones. Okay, so your statement is price levels aren't enough. You need to know market structure. So I'm guessing that's, you know, could be formations, identifying certain formations in the market, technical formations, pattern recognition, um, and flows. So besides option flow, are there other flows that you watch to give you a tell? Just the flow, you meant option flow.
just the flow and the
Oh,
options. Yeah, I
okay.
know. I've got friends and colleagues of mine. They'll be looking at you know,
I think Chaikin has one, a money flow, and Larry
yeah, you
Williams.
can even some guys even look at like footprint type,
Oh,
basically
yeah.
order flow. They're taking order flow and, basically displaying in a graphical format to get a sense of what's happening, kind of a different way of reading the tape. Um, and I kind of equate reading the tape with flows. Like for instance, you're hitting a support level. It looks like it's going to break through it. The VIX is rallying, but prices aren't breaking through the support level. So you get a little disconnect there. Meantime, call volume starting to pick up. So you're like, well, it looks like they want to hold this low. Now, again, it's not
Right.
absolute, but it's trying to connect the dots and going, well, if you think if the VIX was ripping higher, the S&Ps would be on their knees, but they're not. So it's like, oh, okay, well, that's interesting. And then the minute the call volume starts to come in, you're like, here's a low risk entry. It might be wrong, but I'm buying it into a support level that earlier looked like it was going to break, but it's not. And
It's
that's the
kind
kind
of,
of stuff you just got to go through every day. You're just
yeah.
assessing what's happening.
It's kind of like a great attorney. He builds a case. And what
Yes,
we look for is confluence. It's the same thing as having multiple things pointing towards the same potential outcome
exactly.
instead of just breaking a trend line. You know, maybe you have fib levels there, or you've seen option flow there, or there's a major moving average there. So, yeah, I say to people, write down your reasons for a while till it's automatic. You know, you should know why you're getting in the trade, and the more reasons you have for doing it, the more conviction you should have, so that you don't go into the market and say, I hope this one works. You go
Mhm.
into the market and say, all right, Mr. Market, I've done my work. I'm in. Prove me wrong.
Yep, exactly right.
The right attitude. Challenge the markets instead of making them challenging.
Exactly. And get in sync with them. Listen to what they're saying. No, they don't give a rip about your opinion and your forecast
Right.
unless
Right.
on that particular day everybody happens to see that. But that's lightning in a bottle.
What was there that in swing trading, because that's what you used to do in our past lives, right? You were
Mhm.
more of a swing trade. So, what was it, and especially in this environment with um, really getting whiplash with a lot of news flow coming down, that'll probably be that way for 4 years. It's not going to be, I have a hard time believing that someone's just going to be able to buy a spider and play golf for another 3 years. I
Right.
think it's going to be a little more tactical here. So, why don't you show us? Picture speaks 1,000 words. Share your screen and kind of show us. I've noticed on Dave's stream, and you could follow him on X at Dave Floyd Trader, that he also posts daily setups. And I'm assuming that what you want to do, Dave, and you identify them, so you probably want to avoid them. That would be your chop zones,
Exactly. And I'll share
right?
my screen in just a moment. I want to go back and address a comment or question you made. There was a period after like '04, maybe up until about 2015, where I had always, prior to that, been more of a scalper, really suited my temperament. And I can probably look back and go, you know what, I probably didn't put in enough time and collaboration with colleagues after '04 to still stay within that type of a methodology. That's really, you come to realize this. I don't want to say make mistakes, but maybe you don't stay true to who you are. And I think that's really important as a trader. You have to trade in a time frame that is who you are. Some people hate scalping. Some people would rather be buy and hold. There's no wrong answer, but find the one that's right for you. So I did migrate into swing trading with Elliott Wave and whatnot, and it worked for me okay. But it wasn't, it never completely rang true. I always felt as though I was maybe just out of sync with the market. The whole idea
Okay.
of holding trades for long periods just didn't work as well for me. And
Yeah.
I
So
ended up
you go through a journey and a
yeah.
process, and Jack, who I've talked to on several occasions, Jack Schwager, the book that got
Oh,
you
sure.
psyched up. I once asked Jack, I go, what's the most important advice you could give traders and new traders?
Hmm.
And he said, find a trading style that suits your personality.
Yep.
So that's exactly, and that takes time to find it.
It does. And I can look back into like '04, like so, let's say between '02 and '04 is really, you were talking about open outcry to
Yeah,
electronic trading. I lived through all that,
yeah,
the tail end of open outcry. And then we went through decimalization,
yeah,
algorithmic.
oh yeah,
I lived through all that.
yeah.
And then come '02, '04, it was so hard to scalp. And I figured, well, that goose is cooked. I think I was wrong in that. I wasn't mature and wise enough at that stage in my career to go, no, that game's still there. Figure out how to play it. And I
It's
didn't.
changed.
I moved into swing trading. I can't change that. That's what I
Yeah,
did.
right.
And I would say overall it worked out okay. But, come 2015, 2016, I'm like, you know what? I got to go back to what I really think is at my core. So I've gone back to that.
So many people feel like once they've made a decision that it's a failure to, if they're getting other evidence, to give up. Okay. And really, all a decision is a decision that could lead to another decision, right? It's a constant process of one decision after another, just like trading. It's one decision after another, and the key word is next,
Yep,
right?
that's
It's
exactly
part of,
right.
yeah. So next is a real important word in life and also in your trading. So, um, okay, hold unveil the curtain.
Yeah,
I'm going to give you a drum roll.
I think the other thing I would say while I'm bringing this up is that one of the things that I miss out, and I still to this day do miss out on it, is that camaraderie of being on a desk and
I
in a
do too,
room.
Dave.
Oh,
I know.
and
On the floor, at a firm, in a
yep.
bullpen, whatever. Yeah, you're right. So now we do it. So I still collaborate with a lot of people I
Mhm.
work with. I learn from you. I interview a lot of guys that make forecasts. So there still is an intelligence gathering aspect. And you talked about, not just being solo, but collaborating with people. We
Exactly.
only have two eyes, right?
Correct.
So sometimes 1 + 1 = 11 if it's symbiotic, right? It's powerful. I
It
and
is.
and communities.
It
I
is.
love
And
I
I'm
believe in
sorry.
community. I believe in communities.
Absolutely. And I think we can accomplish it to some degree digitally now.
Right.
Back when I had my prop desk was in San Diego, right up in University Town Center there.
Okay.
Started it in '97, shut it down in '02. Great run. I think we had at most maybe 12 people in our office. We were all single-handedly focused on the same thing. There was no deviation from it. In fact, at one point, we were on any given day 3 to 5% of the volume in the QQQs, our office.
It's
And
big.
yeah, but the point of that though is that nobody was off. doing their own thing because they had the squirrel or the shiny object syndrome. And I think when you go off the reservation, when you're in a room, everybody knows. I can go off the reservation online and nobody knows.
Right.
And so I think you're less disciplined when everybody's in their own little silo, even if they're collaborating on Zoom or some other meeting mechanism, Discord or Telegram or what have you. Again, getting off a little off topic here, but the
Yeah.
whole point of the matter is I think we can all save ourselves a lot of time and frustration if we're surrounded by really good people. And it doesn't have to be a ton of them, two to three, one or
Yeah.
two,
Yeah.
that are really at each other's back and transparent with everybody. So
And you're accountable. It makes you accountable.
you have no choice.
Yeah.
And especially in
You,
a room. Now, in a
yeah.
digital room, it's a little different, but in a room, everybody knows
Yeah.
what you. So,
Okay.
um, so yeah, here's my screen. I'm gonna start out at like an hourly chart, which is not what I trade off of, but it's at least to set the tone. And I know it looks a little jumbled. It might look a little too much.
No,
But
it's
here's the
fine.
thing. You noted something very key. I think this applies all the time, but I think it definitely applies in the market environment we're in right now. I'm not looking, and I don't think most people should be looking, even if you're swing trading, nobody should be looking for home runs right now. I think we should be taking our entry points at our levels that we've identified and then scaling out of the majority of our trade at the next logical level above or below, depending if you're long or short. Because I don't know where the
Uh,
market's going to go on a minute to minute basis. And I know I'm stating the obvious there, but really in this market, that's so true. I've had a couple of clients recently on, the folks that get my research note, I'll come in the next day and they're still long or short from the night before. The target was hit, but they're still holding for that home run. I'm like, no, you can't do that. Get your entry.
do you believe in partials? If a guy
Absolutely.
can't do that because he's looking for more, why not? I mean, it's not a profit till you take it. If you want to stay longer term, at least you book partial profits and you
That's my
reduce the risk. Huh?
That's my philosophy. I think if you
Okay.
take 50 to 75% off at the next level, and I'll give you a real world example here in just a moment, um, trail the stop on the rest.
Yeah.
Who knows how far the market will run? Maybe it stops you out, but you set the stop so you don't give back all your gains. Yeah, sometimes you don't maximize the gain, but I think stacking your wins as opposed to going for that home run because the market doesn't give you home runs all the time. Market's usually doing a lot of
Corrective
and
action.
zagging. So rather than, again, why try to outsmart the market? If you know that the level that you're looking at has been heavily traded over a period of time and left a big stamp on your chart saying, hey, for instance, do an
You
example.
know, Dave, I talked to Peter Brandt,
Oh,
and
sure.
that's exactly his style. He'll reduce risk on his trade. Here he knows he's going to take a partial and then move
Mhm.
his stop to BE. And
Exactly.
here's a market wizard. Okay.
Yep.
So, in fact, I think it was either him or Jack said, if you're not taking partials, you're assuming you're right 1,000% of the time.
That's right. That's right.
How ridiculous to do that, to assume that.
It's the brain. It's the brain that gets in our way.
Yeah.
And I can tell you that most of the levels you see on this chart right here have been there for a while. I'm not drawing in these channels after the fact.
Yeah.
And as a result, what has the market done when it gets to these levels?
Yeah.
So if you're long from, let's say, down here, hypothetically, you
Yeah.
darn well better be taking profits up into there. Trail your stop. If you get lucky, great. We're going to 61.70. Peel
Yeah.
off a little bit more, then keep a small runner because maybe it goes to 6,500. Who
Yeah.
knows?
So money management is really the key. How to manage your trades, yeah, not just your entry. Everyone thinks their entry is important.
Right.
It's managing the trade is as important as a good entry because you could have a
Absolutely.
great entry and screw the whole deal up.
Exactly. So, don't be intimidated by what you see on the chart here. These are like mileposts. It's like looking at a map. Okay, we're starting to hike here. We're
Yeah.
hiking to here. And it's the same thing here. These are simply guideposts. Even if you don't understand how they're derived, it doesn't really matter. All you're doing is using them as a way for you to enter, exit, and adjust stop losses. Trading doesn't
Okay.
have to be more complicated than
So show us how you'd apply VIX to this scenario.
that. Okay. So I'm just going to overlay VIX on here. Well, actually, you know what I'll do? I'll bring over the VIX chart. Now let's go to like a 5 minute chart because I'm really trading off of 1 and 5 minute bars, and I think that's going to be far more relevant.
Could I be your broker?
You could, although you'd be.
Trade view markets. There you go.
I don't make
All
as many trades as you might think. I might make.
right, I know. I when I was a broker, I said, I would tell people, trading the tick chart sometimes can be very exciting for me.
So
Anyway,
I brought over my VIX chart.
yeah,
Again, levels are drawn on there. So
yeah,
again, what am I looking for? Again, I'm looking for confluence, as you said earlier. So earlier in the session, this is right the New York opening right here. So the
wow.
minute we broke back below this key level, which had been tested over numerous sessions, and once we
Okay,
broke back below and broke back below again, that's what
that was
allowed
a
us.
green light.
Well, it gives you permission to certainly consider going long. Then you look at checkbox number 3. What are option flows doing? Well, option flows on the day were still kind of neutral. They were kind of slightly more negative, but in terms of this move off the lows, option flows really started to, actually, it was right off of this low right here. Option flows really shifted. So if you measured option flows from the opening to here, they were kind of neutral. But then when you took the measurement off this swing low and you get into this bar, they were really bullish. That combined with the VIX breaking down, you're like, okay, I can be long here. It's going to whip
Right.
you around, of course, but at least you get the wind at your back. And, here we are, 10 points higher, and we're kind of putting in a little bit of a flag, but I fully expect us to go up to this 61.53 level again, or into this overall zone. And then if we get above there, we get above, come back and retest. And again, if the VIX is giving us the confirmation, if option flows are giving us the confirmation, maybe I add to my position at that point or establish a new position if you're flat. So it's all about just identifying the price levels that the market is likely to respect. Doesn't mean that you have a crystal ball, but I do believe objectively identifying the price levels. There's no subjectivity here.
They have a memory. The market has a memory. It's left brained.
Yep. And I think the other thing that's really cool about the option flows, and again, I'm a little bit above my pay grade here in the explanation, but I think you'll get the gist of it. If you have a huge, and there is in the options market, there's so much volume now of short-term dated options, whether it be 0 DTE or a week out, whatever. Just think about the mechanics behind that. The dealer is selling all these people a bunch of call options or put options. They're net short calls, net short puts, whatever the case may be. How do they overcome that?
They have to go into the market to hedge it.
Bingo. So sometimes you get a self-fulfilling prophecy. The
Okay.
call buyers trigger the dealers to be short. Dealers end up having to cover via or hedge their risk by going along the underlying market. That just fuels the fire. It's
Okay.
not perfect, but again, that's market structure,
Uh,
understanding what's happening behind the scenes.
Do you differentiate between an option sweep and what some people call wise guy trades, which are huge retail guys or whales, compared to option sweeps being more institutional
I'm
and
gonna,
larger?
I'll play a little bit ignorant here. I'm not really sure what you mean by an option sweep. I've not heard that term. Maybe I know it, but I don't know it under that term.
Okay. Well, Mike would be able to explain it better, but there is a difference between um, an option bet. Like I can make a $20,000 option bet
Mm-hmm.
or $50,000 option bet, but these option sweeps are hundreds and hundreds of thousands of dollars being bet on a strike and a
Mm-hmm.
date. So there is a difference in the player, not the
Sure.
vehicle, the player.
That's true. And I think the one thing that still is a mystery to everybody is we don't know if what we're seeing is part of an overall larger strategy that maybe it's complete opposite. Just because you see a bunch of call buying, maybe that's associated with being
Maybe they're
short call.
riding them. Yeah,
Could be a
you're
short
right.
call spread. It could be part of a short call spread, which is a bearish thing.
Yeah,
So again, it's imperfect at best,
right.
but we do the best we can in terms of gauging whether or not we're looking at net call buying or net put buying. And yeah, sometimes you're going to be wrong. Imagine that. You're going to be wrong sometimes. And that's about the best you can do. But it's better than not having that information to begin with. Because
Yeah,
if what I've learned over the years is that trading the price level alone is not enough. Yeah, it's still a great strategy, don't get me wrong, but you got to have everything else kind of at your back at the same time. Option flows, VIX, even something as simple as looking what the market internals are or how they're improving,
yeah. Advanced breadth, they have advanced
exactly that
decline.
that all factors in. So, have
Yeah,
yourself a nice little checklist.
yeah. Well, Dave, what's your business model now? You're teaching people your methods. You have a Discord room or something. Why don't you go to your website and show us what you're doing and offering to the public,
Well, the main
if
thing
you'd
I'm
like.
doing, I never really held myself out there as an educator. I'm happy to provide the framework with what I do. So I'll send out a morning note which highlights all these levels, and I'll give a couple of possible scenarios. But most of the meat on the bone comes from being in the Telegram room so that we can then
Okay,
incorporate
Telegram.
real-time information. So I'll make updates on option flows all the time to my clients saying, hey, I really like the support level and we're getting option flows and we're getting VIX. So real time stuff. So that's still a big core of my business. But
Okay,
actually 3 years ago this month, I launched a managed account program solely based on what I'm doing in my own personal account. That's really where I'm pushing the business nowadays is more on the managed account.
okay.
It's what I want to do. It's a stickier business model because a lot of people realize that what I'm doing right here, one, requires full time and it requires a lot of time to get to the point where you're proficient at it. So yeah, I have a group of folks that are diligently working down that path and many are already on that path. But it's not for everybody. I
Are
get
you a
that.
CTA?
Yeah. Well,
Okay.
no, not a
Commodity trading advisor pool.
no, not registered as a CTA. No.
Okay.
Doing this purely from a copy standpoint until we get proof of
Okay.
concept and scale. And
I
what I
see.
would consider scale is when we get into, probably north of 25 million. Right now, we're at 7 million under management.
Ever have trouble with a trade copier?
Now the technology's really come a long ways
Yeah.
where the fills are really good. And my style is, as you would imagine, it's grinding. I'm not looking for the home runs. I'm looking basically for what I offer. I'm looking for that to be a piece of your portfolio that is truly a diversification tool. It's not correlated to the S&P. It dampens the volatility of your portfolio. Basically, it's an absolute return, positive convexity type vehicle. And that's
Do
what,
you,
people who really understand what they're looking in terms of designing a portfolio, they'll realize, yeah, that's the piece I want in there. That's the thing that's going to give me a slight edge by just basically having some random 60-40 portfolio, which again, nothing wrong with that.
well,
But
there has been.
yeah, that's true. Yeah. And I guess that's a whole different topic. But I think the thing that
Uh,
people don't realize is that when you say diversified portfolio, it's not just assets, but it's also style
right.
diversification. Very few
I
people do what I do.
I
So why not
recommend everyone diversify away from themselves a little bit.
exactly. So
Really, I mean, because we all go through drawdown periods. Do you trade with hard stops?
on my slightly longer term trades, and when I say slightly
No,
longer, trades that could last,
what all your trades.
I have a hard stop in mind on my scalps, but I'm not entering them with my stop and take profit on the books. But you'd be hard pressed to not call that a hard stop because I'm pretty dang disciplined. My stats
Okay.
prove that.
You ever that thought ever cross your mind? I think I'll watch it for a while.
Of Did the thought ever cross my mind to do what again,
Yeah,
Dale?
when you probably be close to where you'll be maybe taking an exit and you lose your discipline, say, I'll just see what happens tomorrow. I think I'll hold it.
Well, I'll never do that overnight. I will, I'm a human being. I will sometimes fudge intraday, but
Yeah.
that's only if there's something that's actually starting to percolate and I might just want to give it a little bit of room. And when I say a little bit, it's not much.
Okay.
But be honest with you, will I make a mistake every once in a while? Heck yes. But you could also make the same argument that if it was completely mechanical, that you sometimes might get stopped out only to find out that your stop was just a little too tight. So
Yeah,
I don't
right the
think there's a,
market, wrong the trade.
yeah, I don't think there's a perfect solution other than you have to be disciplined enough not to do exactly what you said, which is, well, I was going to scalp this trade, but now I see it as a swing trade. Oh, well, no,
Yeah,
alarm bells
yeah.
everywhere.
And I'm an investor now.
Yeah, suddenly I'm warehousing my positions. Well, okay.
Yeah. Well, I'll tell you what, it's really great catching up with you, Dave. I hope you have a great 2025, your managed accounts and the people that you work with in Telegram, that they too um, have abundance this year. And
I'd love to have
let's
some of
not
your
let's not make it a decade next time.
absolutely happy to come back, and I really appreciate you having me come on and share a little bit about what I'm doing. And for those that are listening that are interested in doing the short-term futures trading, I'd encourage you, come on board, get the note, come into the Telegram room. We're pretty dang serious about what we do, and I think we do a pretty good job of it. And if that doesn't work for you, well, you've always got the managed account as well.
Yeah, so go to Aspen Trading and check Dave out, and maybe your personality is more of a scalper, and you've been trying to position and swing trade. So experiment with small money at first,
Yep.
and go around and find your niche. And I'm glad you found yours, Dave, my trading warrior brother.
Thank you
Uh,
very much, Dale. Pleasure
good,
as always. You take
good.
care. And yeah, it won't be 10 years again. Maybe we'll do it another few months.
All right, Dave. Good hunting, buddy.
Thank you. Bye bye
Dave,
now.
Dave Floyd, everyone. You can find him on X at Dave Floyd.